Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, August the 12th, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to give you a overall sense or feel for the week we've just had, as well as our forecast for next week. Metals continue to trade under pressure today. Gold trading off about $8, $9 on the day, 1341.40. That is basis most active December COMEX contract. It's traded to a low of 1338, and the high on the day has been 1362.50. So traders, here we are again on Friday. Market closing lower on the day. Looks like it's going to close off about $7.20, $7.30 in the area of 1342, 1343, but nonetheless, market under pressure. Now, nothing like what we saw last Friday, in which the market dramatically came down, roughly $25. On Monday of this week, of course, the market opened up roughly in the same area of Friday's close. However, it did trade to a new low. This low coming in, when we pull up our next chart, you'll see at about a 61% retracement, and that's a retracement of this rally. Now, that coupled with the following day, meaning Tuesday, this green candle actually unfolded a candlestick pattern simply called a three-river morning star. Let's go ahead and let me pull up the chart that's a little bit more specific. And as you can see, I've put up a chart that has a little bit more information. But as you can see, I've outlined a three-candle pattern called a three-river morning star. In essence, what happens is after a defined downtrend, you get a long red candle. You then get a star, which is either a doji, which is what we're looking at here, in which we have the open and close either identical or very, very close, or a small-bodied candle, and then the following day you get a large green candle, which typically you want to see it as large as possible and having it match that red candle. However, in this case, with the dramatic sell-off we got a week ago Friday, even this nice move, which I believe was about an $8 upside move, is going to be dwarfed when we look at it in relationship to this long drawdown day a week ago Friday. So we actually put a trade on, which was the confirming candle right here to the three-river morning star, and we did that on Wednesday of this week, entered roughly at 1354, and we put stops in under those recent lows, which come in at 1335. Now the low today was 1338, so we certainly didn't get our actual trade stopped out. However, we didn't get the real kind of follow through over the last 2 days that honestly I had hoped we would see. We didn't get the follow through because we had a pretty dramatic off day yesterday, and today once again, we've got these red candles, and typically when you see some sort of a bottom activity, and I draw your attention to the bottoms we had really at the end of May, in which the market came down, you got an engulfing bullish. That's the 2-day pattern you get here, and the next 2 days were really consolidating candles. The difference between having 2 down days here and 2 down days here is the body size on these 2 down days on this particular bottom right here are truly consolidating candles, and they come in before a rather large spike up in the market. However, what we did see today as well as yesterday, we did get that small body today. And yesterday, though, we did get the market coming down and testing these lows here that I personally would have rather seen not occur. However, the bottom line is the market's going to do what the market does. We have our trade in place. We have our stop in place. We will simply have to see how this unfolds. We're up well over 300% on the year, but each trade is critically important to me, and I certainly do not want to have a drawdown on this trade, but at this point, that is quite possible. U.S. equities certainly made a dynamic move this week, with all three moving to new lifetime highs just the other day. Now, today we did get the Dow Jones Industrial Average as well as the Standard & Poor's 500 closing off a little bit, but the NASDAQ continues to ramp up. Actually, I believe this is the 7th consecutive week of higher pricing, and the NASDAQ will close at a new record lifetime high. Dow Jones Industrial Average closing off about 37 points at 18,576. Standard & Poor's closing in essence unchanged, off 1.5 at 2180 and change. And lastly, the NASDAQ, we're looking at the E-mini NASDAQ 100. That closed up 4.5 points at 4804. Now, although it was a disappointing week for precious metals, bulls, gold traders, and alike, equities markets did quite well, all of them closing to new record highs on the week. Daily, of course, the Dow Jones Industrial Average closed off about 37 points, made its new record high yesterday. When we look at the Standard & Poor's, very, very similar action. My daily subscribers know that we have been looking at this chart throughout the week, and we've been talking about a pattern that really was identified and coined by Steve Nissan, candlestick expert here in the United States. And what it is simply called a scouting party. Now, it is a sentiment-driven pattern. It is not a candlestick pattern. And as I said, it was coined by Steve Nissan. And in essence, what they look at, or what he looks at, is as follows. When you have a dynamic level of resistance, either as the market moves to new highs or support as the market moves to new lows, typically what will happen is you will get the market consolidating with huge headwinds, and you can absolutely see that right in here. And what a scouting party is, it is a single cycle, in this case a day, in which the market trades well above and closes above that particular price point as you got here, and that's actually your scout. And the next 2 days on this daily chart, what we're looking to see is whether or not the bears have the fortitude to move that market back below this resistance area, or if the bullish faction is now going to be able to take over control of the market and make the former area of resistance an area of support. If you start to get the market closing above that particular former resistance area, he has labeled this a beachhead. So we had a scouting party beginning of the week. We had our beachhead taking us to new highs in U.S. equities. Crude light staging a dynamic recovery over the last couple of days. This after trading from roughly $52 down to about $39. Market is up today, up almost 3% on the day, $1.16 gain per barrel to close over 44, and that's the key. We'll talk about that when we look at an oil chart at 44.65. So traders, we have certainly seen crude oil after moving up and hitting these tops at around $52 a barrel, and then really trading lower in the cycle to trade to a low of about 39. I have been on record. First, I was looking for the market to trade anywhere between $44 a barrel and $42 a barrel. That was my initial target. As the market broke through here, my sense was we needed to then look at the 50% retracement. That comes in at roughly $39, and we certainly hit that when the market hit these lows and this bottom. This, of course, back in the beginning of the month. As the market traded, you can see we've added these bear channels to the market. They're 44 days in terms of the cycle, and we're looking at, of course, a daily chart here. But as I said, what we were really looking at was to see whether or not it would trade and track within this particular set of channel lines. And I have been on record as recently as this week as saying that I believe we will see the market trade lower or sideways, but we'll see a trade under pressure. Well, today we absolutely got a breakout above these channel lines and closing well above $44 a barrel. 44.70 was the actual close on the contract, the NYMEX contract, of course, of crude oil. And the question is whether or not this market will have energy to move back higher into any kind of a mainstream area. My sense is that this market should continue to track. It has gone up. but it's come up off these lows, and my sense is it will trade within this area, high being about 45 and the low being about $42 a barrel. I still believe that that is what we'll see through the summer, but traders, one thing, the summer is quickly coming to a conclusion. Traders, no doubt, an absolutely disappointing week for gold bulls. After seeing the market under extreme pressure a week ago Friday, of course, when the jobs report came out with a much higher than expected number, bringing it down about $25. On Monday, we saw some continued selling in terms of the intraday low, that going down to exactly a 61% retracement of the rally, which took the market roughly basis December COMEX to 1335. And then the following 2 days, meaning Tuesday and Wednesday, we had nice up days. We had definitely the potential, and I still believe we do have the potential for a consolidation and a bottom formation at those lows at around 1335. Today and yesterday certainly do not confirm that. In fact, we've seen the market once again trade under pressure. Today, trading to a low of about 1338. The key is whether or not those recent lows that were achieved on Tuesday of this week will hold as we open up next week. All things being equal, if that is the case, I still think we have the potential for a second leg of this particular rally that we have been following. If not, and it does break through, we'll have to reevaluate the market as well as our current trading model. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.